All right, it's a new year. It's a good time to plan out what my investing strategies look like. And as I was writing them out, I decided, hey, I want to keep myself accountable by making a YouTube video here. It's also a great way for me to reflect on what I did and what I was planning to do. And it also gets you guys engaged in thinking about your own investing plans. Use this as a guide or motivation for you to now start thinking, whether it's yourself or with your partner, sit down and create an investing plan. Again, a plan is worthless without action, but you've got to start somewhere. So if you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, if you haven't already, you should go ahead and pre-order what I believe will be the #1 wealth building and real estate book in Australia in 2025. My book, Retire Filthy Rich with Real Estate, released for pre-order 3 weeks ago on Amazon. And ever since that, it's been the #1 bestseller across 4 different categories. So firstly, thank you for the support. It looks like you guys want to make 2025 absolutely special. And I know it's about real estate, but there's so many things in that book around mindset, growth hacking, and looking at other alternative investments that I think you should definitely consider. Now, traditionally, over the last couple of years, if you have been following, I usually follow a 3-pillar approach. Now, the 3 pillars that I would normally have invested in have changed this year, and it's the first time it's really changed because I'm actively making that change, and there's now been a 4th pillar that's been added to it. So I'm going to share that with you as we go through this video. Now, I'm a firm believer that you need to diversify once you have the wealth rather than diversifying too early. And this is a big mistake that most people make, and it's something that I did myself as well, and that's why I only have 3 things I invest in. This year there's a 4th, but that's been a necessary change because of where I'm at right now in my finance journey. But if you're starting out and you're trying to build towards your first million, I would go on to say that you probably shouldn't be diversifying. You'd look at 1 or 2 things that you know really, really well and go deep into that. Now, I read this quote in a book by Dan Sullivan called 10x is easier than 2x. And he talks about how most people stay close to the surface level or the higher level, the shallow waters. But usually what you'll find in those waters is small fish, right? But if you go deeper into the deep ocean, you're gonna find the big, big fish. And that's usually what happens when it comes to investing. So if you're someone that wants a plug and play and just works in the background, you could go ahead and do that. But if you really want the bigger fish, I would say focus on 1 or 2 things. And then as you go through your net worth journey, you can go and add some more. So let's start off with the most obvious, which is real estate. My #1 pillar here, and as part of my investing strategy, I dollar cost average into property. And I know it sounds a bit weird because, buying a property is not as easy as buying, say, stocks or crypto. But for me, with where my property portfolio is, or the machine as I like to refer to it, it's at a position now where the equity is gaining a lot faster than I could probably save that money anyway. And so as the equity increases in that portfolio, I use that equity to then go ahead and buy more property. It pretty much works on autopilot, and I run this all through my buyer's agency Search Property. So if you guys are interested in how that all works, outsourcing the entire process of researching, negotiating, and securing the right investments, I'm gonna leave a link in the description box below where you can book in a free call as well. The reason I outsource this is because I don't wanna get caught up with the nitty-gritty details. I want someone else who's doing it daily. They're gonna do it a lot better than me. So for instance, the buyer's agents in my team are speaking to these agents and having a better relationship than they would with me. And I actually run the company. So this is how much I believe in what we're doing, and it's why I'm doubling down in 2025 anyway. Now with real estate, for me, it's a set and forget. I know that there's so much talk about interest rates going up or down, and there's prices are gonna go up or down, and there's a collapse and this and that. There's the 18.6-year cycle, and I've spoken about that as well, but I don't care. And I like to block out the white noise. I like to have my emergency fund in place, and I just go out there and acquire more real estate. For me, if you're looking at the supply and demand ratios, if you're looking at the right locations and you're buying at the right price point, it doesn't really matter. As long as it's part of your strategy, it's in line with your bigger goals, you're gonna absolutely kill it. I've been doing this for almost 11 years now, and I can promise you, I knew a lot less back then than I do now. And even back then, the decisions I've made have now compounded to a point where if I look back with the information I had, I probably wouldn't have even bought the first couple of properties, and I wouldn't have even started. So for me, it's a dollar cost averaging method. I'm going out there and putting 30% of my cash after taxes towards real estate. So that also means not only the equity out of my properties, but also personal funds, I'm going in and buying more real estate. Or despite what the journalists who have no property next to their name suggest that there's a collapse coming, I live and breathe this stuff. And I believe that 2025 and 2026 are going to be great years to get into the property market. Next up is a 5% allocation, and that's towards Bitcoin. Now, I know there's a lot of people that may hear that and say, I don't know about that because I think it's a scam. I don't think it's going to work. And, you know, at this point, it might be a Ponzi just like real estate, apparently. But for me, this is why I allocate 5%, because the way I look at it is that may be the new financial system. It might be something that the US, who have spoken about it with the new president coming in, Trump, suggesting that they might use it as a strategic reserve. And there's others that say that it's actually mathematical money. And so the way that it's designed is that it's a system that allows you to be your own bank. And it's a system that's out of the traditional finance world, which means, for instance, if I decide to go to the bank today and withdraw $100,000, I probably can't get that. In fact, I'd go on to say I couldn't get that, and I'm probably getting a phone call from like the financial securities team. Whereas if you control your own money, like Bitcoin, you could live anywhere around the world and you could control it the way you want. Now, if that scenario plays out and Bitcoin does end up becoming the same market cap size of gold, it would mean it would appreciate by 9x from today's prices. So although it's pretty much an inflation hedge or something that I've gone out there and got as an insurance policy, or trying to build more of a position in there as an insurance policy against traditional finance, it may be something that could be a massive wealth building tool. I also think that we're going to have a system where we're going to allow for lending across our Bitcoin into the real world, which allows us to buy property and other things like that. And on that note, I think you're probably going to get into a position where you may not have to have significant borrowing capacities to be able to do something like that. It's going to come down to your asset allocation rather than your cash flow. But again, that's a whole new world. And the truth is, it could all go down to zero. So in the case it does, I'm only allocating 5%, but 5% is enough for me to know that I've got skin in the game in case that world does happen. And if it does, and it's becoming more likely that it is, it'll allow me to build enough information and knowledge about that space. And as I progress in the next 12 to 18 months, to allocate or reallocate some of my other positions into Bitcoin as well. And the final pillar of the third pillar approach that I've taken is trading cards or collectibles. Now for me, I've spoken about this on the channel. I was featured on the AFR as well for spending $50,000 on Pokemon cards, and that investment is significantly more today. Now my portfolio is in the couple of $100,000s when it comes to trading cards, and I know that sounds so stupid because it generates no cash flow. You can't borrow against it like you can real estate, and there is no leverage. Well, not within the TCG world. You could take out equity or you could take out a loan and buy that stuff, but I wouldn't touch it that way. I just simply put and allocate cash towards it. Now, why do I do this? And I'm only allocating 1% here, by the way. And the reason I've only allocated 1% is because I already have a position that I'm very comfortable with. It's appreciating at anywhere between 20 and 30% every single year, and it compounds. To me, that makes a lot more sense than to have my money stuck in a bank account. And if it all went to zero, and I hope it doesn't, but if it all went to zero and nobody wanted cards ever again, I would at least be able to open up these cards, live through nostalgia and the emotions that come with it. And I'm hoping that it's going to be worth a lot more, and I'm going to pass that down to my kids because I wish I had that situation happen to me, but it didn't. And I still remember going out there and asking mum to buy me a $3 booster pack, which at that time was a jungle or fossil booster pack. And I know there's some OGs listening that you would know exactly what I'm talking about. So for me, a 1% allocation is all I'm allocating there. And that brings my total 3-pillar approach to 36%, which means we still have 64% to go. Now, before I continue, smash that subscribe button because I'm planning to bring out more content than ever before. And not just content for the sake of content, more valuable content so you guys can achieve more throughout this year. So again, smash that subscribe button. Let's continue. Next up is we have cash at 15%. This is probably going to be the highest level of cash that I've held in a very, very long time, and there's good reason for it. And no, it's not because I think the market's going to crash. It's more so because I'm taking on more risk this year. Because I'm taking out more debt to go into more property, I've realized that I need to have a bit more when it comes to the emergency fund versus what I've had previously. In addition to that, because of my final allocation or the 4th pillar in my approach this year, it means that I need to have that emergency fund. And I'm going to get onto that in a little bit. But next up, we have 5%, which I know is not investing, but in a way it is me spending money and rewarding myself. I've probably found myself over the last maybe 36 months making a lot more money, but not spending as much as I probably want to have spent. And I know that there's a thing called lifestyle creep, and it's probably a really good thing, but I need to take some time and enjoy life as well. And I say that with a smirk on my face because I did manage to go on 4 international trips last year. I have enjoyed my life and I absolutely love waking up in the morning doing what I love. But I think there is something there where I need to start spending a little bit more, whether it's myself or family, and that's more likely where it's going to get spent. But I need to be rewarding myself because there is science that backs this, but apparently you rewarding yourself means that you're going out there, taking profits out, and there can be a really positive element to that as well. So that is going to be a big part of what I do this year. Well, I say big part, but it's only 5%. And a couple of other things that we have changed over the last couple of months is what we're purchasing in terms of meat and vegetables have been more organic recently, and that's going to naturally increase how much we spend on those things. But that is important, as well as going to the sauna and things like that. So there's going to be a bit more there that is invested, and that's why it's in the investing plan. And finally, we've got into what is the biggest allocation for me in 2025 and makes up 44% of my entire investing plan. It's a fourth pillar. Although it has existed over the last couple of years, this year it's been very intentional with it. And it's actually going into business. Now that is on two folds. Number one is now the team is more than 50 full-time staff. So it does require me to invest a lot more money into the business to, one, keep it growing to the point that I want it to, but also going out there and rewarding people that work with us. I found myself being around people that are like-minded, but also really pushing me in different elements. And I think we've now created an environment where the culture, again, you can be the judge of that when you check out all the vlogs that I have on this channel with Behind the Agency, but I find myself going into work and really enjoying the company of others there. Everyone seems to be growing, everyone seems to be progressing and sharing ideas where it's not just about finance and real estate, it's outside of that as well, and just becoming better people as well. So investing back into Search Property, the buyer's agency, but also going beyond that and have a few opportunities that are coming up this year, a couple of announcements that I have to also make with you guys as well. And that's requiring a lot more money to be invested in there. I'm really excited by that. I'm definitely not someone who sits there and says, I need 2,000 properties because I want to flex online. I'm getting what I need. And then outside of that, I want to bring value to as many people as possible. I want to bring value with purpose. So something that makes me really happy, I can go out there, bring more value to the community that I'm in as well. So that's what I'm really focusing on this year as well. So that's pretty much my entire investing plan. A big reason why any of this stuff is possible and the reason why I'm motivated to do it is because of you. We've had a massive 2024 and I'm so excited to see what 2025 holds, and it's all going to start with your support. As you subscribe to the channel, share it with someone else that needs to be in the right frame of mind because 2025 is going to be nuts. As some people like to say, it's going to be a movie. I hope you guys have enjoyed this video and I'll catch you guys on the next one. Thanks guys.